Well, twins, and today we're going to be talking about some stocks that we think we're going to wait on, or maybe just leave alone altogether because everything that's going on with them.
Now, if you haven't gotten started investing in the stock market and you're looking into single stocks and ETFs, why don't you check out Moomoo? Use our link in the description below to get up to 15 free stocks. Now, let's jump into it, Nicole. What's your first stock?
Okay, my first stock that I want to talk about that I think I'm going to wait on. And by the way, guys, these are our opinions. Let's just get that straight off the bat. We're not telling you to buy, hold, or sell anything.
This is not financial advice. Do your own research and make your own opinion.
That's right. Now, the first stock I want to talk about today is 3M. I'm not sure if you guys have seen it. It's been in the news lately, and it's not for a good reason. They have lawsuits all over the place, and it might be mounting lawsuits. The first lawsuit I want to talk about is for Forever Chemicals. 3M, they do a lot of chemicals in their products, and they do a lot of research. Some of those chemicals actually got into the groundwater in Indianapolis and also even in Europe. These chemicals are actually contaminating the water, and it's getting into people's bodies too. It's not a good thing. There is a lawsuit going on for that. The second lawsuit that's been big in the news lately is about the earplugs from one of the subsidiaries of 3M. Over 230,000 soldiers have been impacted by faulty earplugs that were branded under 3M. So the lawsuits are mounting on it, and they're trying to somehow get away from all the lawsuits that are happening. They actually try to put the subsidiary that made the earplugs, they try to put that into bankruptcy so that they can handle the law proceedings under that. But the judges have ruled against it. So this looks like this case is not going their way. So because of those things, I think 3M is a wait and see right now.
Now, you know, it's interesting. When we think about 3M, you really think about Post-it notes, but I never thought about earplugs or Forever Chemicals because, you know, there's some chemicals in those Post-it notes too. But very interesting point.
Right now, 3M is trading around $117, and that is off of its high, the 52-week high of 186. I do believe that the stock price can go lower. So
I'm going to jump into my first pick, which is Bestbuy. Now, it might seem like I'm piling on to this, but I'm going to tell you right now. When I look into a stock, I look at its fundamentals, but I also use my own experience in the store as a really big factor in whether or not I'm going to buy or sell that stock. So in terms of Bestbuy, just in my opinion, when it comes to buying electronics, Bestbuy is probably the last resort that I go to buy something. And I will probably only walk into the store if I need something that day. Now, granted, I had to walk in there earlier this week. And if you notice, if you've been in there lately, the shelves, you see a lot of out of stock items. There's like always a sign, out of stock, out of stock. Everything is like it's empty shelves. Now, when you also go in there, you'll see a lot of employees standing around, which is never a good thing for a business. Best Buy is suffering right now. A lot of people are not buying. Their revenue and their profit margins are shrinking. Now, we're going into fall now, so they could potentially get better. But when you're looking at Best Buy from like a Black Friday perspective, if they have to cut their prices on their electronics to entice people into the store, especially with inflation pressures coming out and what the Fed is going to do, I think it's not going to help their profit margins because they're going to have to slash prices just to get people into the store. So I would hold off for now. Let's see where it's trading at. Right now, Best Buy is trading at around $72 and its 52-week high was around $141. So you're looking at it's half off of its 52-week high. I don't see it getting better anytime soon because we don't know what's happening towards the end of the year. This is when they make a lot of their money, but people are pulling back and saying, look, I'd rather buy my electronics or hold off right now from another place or hold off and buy electronics just in general. I don't see it getting better in the short term.
Now, Nadi, do you consider that a wait and see, or are you saying stay away from the stock altogether?
I would say for now, I won't say stay away from the stock altogether because they do have a very good dividend yield. And for a dividend investor like me, I like that. And it's a way to entice people to buy the stock, even though it's low right now. But I look more at growth and the dividend. And I don't see them growing that much in the short term. Maybe not a direct don't buy, but maybe wait and see. But if you're into the dividend play, they have close to a 5% yield. That's a good enticement if you're looking for dividends.
Yeah, I was going to say, I know that they have a pretty high dividend. And that's pretty good if you're looking for passive income, because we know dividends are the only way to make passive income in the stock market. Okay. The next stock I want to talk about, following off of what Nadia was saying about the business model being a little bit of a needed to be changed. I would say it would be Macy's. Macy's right now is trading around $16, which is off this high 52-week high of almost $38. And the reason why I say for me, Macy's might be a wait and see because it's just the way the business is run. It is a store that you have to go into. They do have an online presence, and they are, for me, a seasonal company in terms of people waiting for the big sales like Labor Day and Black Friday to really come in. So I think that right there is a model where they have to, rely on so many customers coming in to make that revenue go up. I think this is also a company that is suffering from a lot of inventory problems. They had a lot of supply issues that they were trying to avoid with China. So they brought a lot of inventory, but now they have to slash the prices on the inventory because the customers were just not there. There's two reasons why the customer demand is just not there. One, I believe Macy's is pricing their things a little high. Even when on sale, I still think they're a little high. So that might make a lot of customers weary. And two, just inflation. They're waiting for Labor Day sales, Black Friday to make their purchases. I know Macy's is trying some new things. They just released Kylie Jenner's cosmetic lines, which is going to bring them a demographic of young people.
Yeah.
However, I don't see how that's going to translate into a ton of sales. They're going to get the cosmetic people in. But do you think those cosmetic people are going to turn around from the cosmetic side and then go over and buy some clothes out of Macy's? I would like to see Macy's change it up. If you're going to get that customer in the store for the cosmetic and it's a younger customer, get the clothes in there that customer might like to buy also, so you have a complementary business. If they do that, I do see some revenue growing. But as of now, I'm going to wait.
Well, you know what? I find that surprising because I went into Macy's maybe a month or two ago. In New York City, they have their flagship store in Herald Square, and they stepped up their game. I'm going to tell you, they renovated the store. They have some nice, trendy clothes in there. They put some restaurants in there. I was very surprised. It's not the old Macy's like it was. So they are targeting a different crowd. I see them more online with like Nordstrom, but I do understand a lot of stores are suffering from the inventory issues. But I'm telling you now, I see them with that long-term play, and hopefully that would entice people back into the stores.
I think you also have a little bit of a bias living in New York City and seeing their flagship stores. If Macy was doing that across the board in all their stores, I might agree with you. But that flagship store is like no other store that they have. And again, like you mentioned, inflation's on the customer part. That is actually why my third pick of the day is AT&T and why inflation is really hurting them. Like, did you know that paying bills late is also a sign that people can tell that maybe we're going into a recession? Talking about, car note payments, any type of bill payment that you have. When people start paying it late, it might show that inflation is creeping up too much and people are starting to pull back or being unable to pay those bills. Mm-hmm. AT&T is suffering from that. They have said that customers are paying their bills. More customers are paying their bill late. And no company likes it when their customers are paying their bill late. Inflation, if it keeps going up, and I know the Fed is trying to, stop it, but if inflation keeps going up, I can see them saying, you know what, I'm not going to buy a new phone. I might even, cancel my phone service. Or if they don't cancel the phone service, because I know so many people have their phone attached to the hip and they're not going to give it up. It might seem as an essential good. AT&T is also in the streaming business. Streaming business is big, but I believe one of the first things to go when people look in the budget and where they can cut costs would be the streaming business. So if AT&T is relying on that streaming business as a source of revenue, I can see that going down along with being the late payments for phone bills. They are going to hurt it. Even though it's a blue chip company and people like to go to it during times of volatility in the market, I think AT&T is not the best thing right now. I think you can hold off. It has a 6% dividend, which is great, but they actually cut their dividend over 50%. So if they're having these problems when it comes to cash flow, I'm not sure that you might not see a cut in their dividends again. So that worries me. And I think the price has a little bit more to go before it reaches its bottom. I'm not talking about time in the market, but I think you might get a better buy later on.
Well, I will disagree with you on one point. I think people are not going to stop buying phones because they might be feeling inflation right now. I think they will put their money to a phone and will sacrifice everything else to get that newest phone. So that's one thing. Also, if people are paying their bills late, and especially a phone bill, one of the things is phone bill is not going to hit your credit report in the first 30 days.
Don't give them tips like that.
Okay, I'm just letting you know. If you're going to cut on something, phone bill might be one of them. all right? And you'd rather put that money towards putting a roof over your head. If it's going to come down to putting a roof over your head or paying for that cell phone bill, and they're not going to cut it off if you ain't paid for the first 30 days, people might be rocking with that a little bit more, okay?
And it also doesn't, like you said, doesn't go against your credit score right now, right?
Yeah, and I'm not a fan of anybody cutting their dividend. So I would probably stay away from the stock. If it goes down a little bit more, maybe go ahead, jump in, but that's your opinion. Now, my next pick, and like I said, we could do the fundamentals. We can go into the breakdown of the numbers and everything, but that could be a little bit boring. Our perspective is we look at companies not only at their fundamentals, but from our personal point of view. So that's going to influence my next one, Gap. Now, Gap, I know, is getting beat up in the news. The stock price is getting beat up, and that's primarily because they're suffering on the Old Navy front and on the Gap front, and on Athleta, I think they also have, right? But the brand that's doing okay is Banana Republic. Now, let's take a step back from those numbers. One, just from my personal perspective, Gap, the clothing they have right now is kind of corny. And I'm coming from a 40-something-year-old mom perspective. So I'm not one of the most trendy people out there, but I do have some style. I will let you know that. But if I think your stuff is corny, the younger generation going to think it's corny. Now, they came out with some stuff. I can't believe you used
the word corny. Like, you're really dating yourself with the word corny.
Care. If it's corny, it's corny. But the thing is that Gap is trying some new things. Like, they came out with the Dapper Dan hoodies and stuff, and I like that. And they sold off the shelves, and they came out with an NFT. They're trying to think long term. But there's a lot of problems that are going on in Gap right now, and not just with their corny clothes, okay? Their CEO stepped down after probably not even 3 years on the job. And right now they have an interim CEO. So there's at the top, they're not even stable. On top of that, Kanye West just came out saying that he's dropping his deal with Gap to do the Yeezy brand and everything because they're not upholding their end of the bargain. For me,
I couldn't care less about Kanye, but go ahead.
I could care less about Kanye West or Kanye West clothes, but I'm going to tell you right now, Yeezy brand sells. People love it. That will bring in a new crowd, and that would have been good for Gap. But if that fell through, it's another problem that's happening for Gap. But I will say, Banana Republic, they're stepping their game up. But that's not enough to hold the Gap brand as a whole. The other stuff has to step up. They're doing a round of layoffs right now when a lot of people are saying they're looking to hire people. So if a company is laying people off, they're cutting costs, they have no inventory, and their clothes are corny, I don't see this changing in the long term. Now, they're using the excuse of people are not spending as much and they're holding off on their discretionary spending. Come on now. When are we going to stop hearing this excuse? People will spend money on what they want. It doesn't matter what inflation is happening right now. Zara is killing the game right now. Maybe not. They're killing it in that same space. And I would think that Zara is comparable to Gap or Banana Republic. So what's the excuse?
I agree with you. I'm tired of hearing that people are tightening their belts. And then
when
it's really bad company performance and you not learning how to get your feet into this new environment and learning what to do and get the demand that the people want.
And you don't have anybody really manning that ship right now. So I don't think Gap is going to do well going forward for a while. I think right now, Gap, it's not a buy.
Yeah, I mean, I think overall, we're really not filling the big box retail space if they're not learning how to navigate this new environment where people are paying for quality and looks and style. If they haven't blended those three together along with the coolness factor and convenience factor, I think it's not working for them. We're talking from a gut perspective. Now, I don't know if many of you know, Nadia and I both have our undergraduate degrees from Columbia. We worked on Wall Street for over 10 years, and I have my MBA from NYU. Now, with those things, we can do the fundamentals, but the first thing that we start off on is our gut instinct on a company, and then we look and research that company afterwards. So that's a good tip for anybody. Go for what you know, use your gut instinct, and then further research it to see if your gut instinct is right or not. Love to hear what you guys think about our picks. You think we're wrong, you think we're right, doesn't matter. Put in the comments. We want to hear about it. We want to learn from you guys. We just don't want to be talking to a screen. We want feedback.
And if you haven't started investing yet and you need to open up an account, use our link below in the description for Moomoo and get up to 15 free stocks.